Alright, what's good, y'all? It's your boy Zone. I'm back with another video. Now look, today I'm finna show y'all another scalping method that y'all can use with your trading, right? Because I know a lot of y'all want to scalp. You know what I'm saying? Y'all not really trying to get into the whole swing trading way of trading, because you really got to sit and analyze the charts a lot more, and you got to wait for big moves with lower lot sizes to try to catch the big play, right, when you swing trading. But for scalpers, you can literally load up the lots, catch a quick move, and be done for the week. You know what I'm saying? As long as you know how to analyze these charts and know when to get in and when to get out the market, right? So that's what I'm gonna show y'all today. You can use this strategy with the EMA strategy that I showed y'all in my first video, right? All this stuff like tie in with each other. So you know, everything that I'm teaching y'all is gonna show y'all gonna be able to mix them together and be able to get stronger trades, because you're gonna know everything to look at while you're trading, if that make any sense. So yeah, before we get into the video though, I need y'all to join my Telegram chat, right? It's a free Telegram chat that y'all can join. It's just a whole group full of traders. We went from like 10 members to 260 something members in a week, right? So yeah, the link is gonna be in the description. That chat is free for everybody to join. If you want to join my VIP chat, which I highly recommend, because I just literally send my trades and y'all copy and paste them, you can join the free chat and then let me know in the free chat that you want to join the VIP, and I'll send you a message, or I'll have my assistant send you a message, and she'll respond to everybody for me. And y'all could join the signals chat for $30 a month, which is a good price, because you're gonna make more than $30, you know what I'm saying, throughout that month, depending on what your account size is and how much you risk it, you know what I'm saying. Yeah, I send high quality trades though, so nobody shouldn't be blowing their account. But anyway, we finna hop into this, right? So let me go head over to the trading screen so y'all can see what I'm about to do. So look, we on the trading screen, right? Hopefully my video look good for y'all. But anyway, basically what I did on this chart, right? I come on the 15 minute. This is for gold, right? This works for every chart, but I'm just using gold because gold moved a lot last week, and it's perfect market structure for what I want to show y'all, right? So you can use this on US30, GBP, USD, any trading pair. It's all the same. This is just basic market structure, right? But market structure play a lot into what these candles do and how pairs move. So it's gonna be real useful for y'all. So basically what you want to do is, right, you want to, it might look weird and confusing right now, but basically all I did was went on a 15-minute chart, because like I said, we want a quick move, so we want to see the smaller time frame structure so we can know what areas price is moving off of from these levels, right? So basically all I did was took just a basic horizontal line, and I just marked up some areas where price touched multiple times and rejected, right? So as you can see, we got one touch here, we got multiple touches on this area, we got a drop here, you know what I'm saying? So this is a strong zone. We got an area right here where price dropped, price bounced off of this area and went back up, bounced off, went back up, dropped from here. You know what I'm saying? That's basically all I'm doing, is I'm marking up areas where I see support and resistance, and when I see strong market structure. I'm not just gonna go on my chart and just click up every single thing that touches. You know what I'm saying? That's too much, and you're gonna confuse yourself. Just have like 2, 3, or 4 levels that you're looking at in the current market. You don't have to mark up the chart from all the way back to last year. It's pointless. You get me? So that's all I'm doing. I got these 3 levels right here, right? And I'm basically about to show y'all what happened in the past to where you could have made some money off these trades. So me, I don't really use these horizontal lines, right? I just take a box and I draw a trend. I just draw a zone, because I don't want to look at this line and say the trade has to come to this line in order for me to take the trade, if that make any sense. So instead, I just draw a zone around the area, and for this, I would have marked up like this right here. Say, okay, if price come right here, I want to see some price action, and if any type of price action happens right here, then I'm gonna get into the trade, right? Same for here. I would have took this trade from probably like, let me see. I would have took it from this wick all the way down to these wicks. It's kind of messy, but you get the point. You just want to basically get these touches, right? Get these touches, make them look pretty. So we got those, and then for down here, I will mark up this area as well, and it'll just look something like this. Okay, and I'm gonna show y'all why I marked up this level right now, so we can get rid of these horizontal lines. Y'all can use those if y'all want. I don't use them. I just like to draw a zone because it's way cleaner, and it gives you a better outlook on what you're doing instead of just drawing those lines everywhere. So what we see now, if I was to draw this down here, like this, just to get this last little wick. All right, so this is my zone for here, here, and here. We got 3 zones, right? What I'm looking for is price to show me some type of price action in these areas. This right here was basically my, I would use this area right here as an area of resistance, no, support, right? I would use this area as an area of support. And when I seen price come up here and come back down to these 2 candle wicks, plus it bounced off my 13 EMA, right? It's coming off my 13 EMA, which is letting me know that it's still following the trend. So you just wait, and I usually like to take my trades on a 50 EMA, right? Because it's a stronger move. So as you can see, price came up here. We're not even looking at none of this right now. Price came up here, right? Gave us a area of resistance because price shot down after that. It come back to our zone, right? What's at our zone? Our 50 EMA, right? It broke through the 50 EMA, but it didn't show any type of price action that it was going to drop below that. So what happened? It came down to our area, right? It came to our 50 EMA. Now I'm looking like, okay, what's going on right now? What do I see? In this area, I see that the sellers are losing momentum, right? As price comes down, all these candles are getting smaller. We got this big candle right here, smaller, 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 right? Then we got this candlestick pattern right here, which is letting me know that, okay, the sellers are losing momentum. Then what we get an engulfing candle, right? Right back into our 50 EMA. So you could have pulled this trade right here, right? Just based off that engulfing candle, you could have pulled the trade right here. So what we got 3 confirmations. We got price came back to our area of support, right? To our zone. Price is rejecting off our 50 EMA. And we got an engulfing candle. And we got, you know what I'm saying, these candlesticks getting smaller, which means that the sellers are losing momentum, right? These candles got names, but I don't know all those names for all these candles because they all mean something different. You know what I'm saying? So basically what you say, this, if you were to pull the trade here, you want to always wait till it come back into the engulfing candle, right? So you could have waited right here or right here. I most likely probably would have pulled it off the 50 EMA. So we could have took this trade from 2035. How much drawdown you would have been in? You would have been in 30 pips, about 20 pips drawdown, right? If you using the correct leverage, 20 pips drawdown on gold is not that serious. If you got a $500 account and you using a 1.00, right? You using 1 lot on gold, you would have been down bro, I got this stupid fruit fly here. You would have been down $200, right? For a second, for about, 15 minutes. But that's where it comes in, where you can't over leverage your account. Because if you're not over leveraging, then you shouldn't be scared of being in drawdown. You feel me? If you would have instead used a 0.25 or 0.50, even that's over leveraging on a $50 account. But I'm saying that's better than using a lot. So if you would have poured this trade here at 2035 and you just held it all the way up here, bruh, you done caught like more than 20 pips, right? You caught more than 20 pips. It took a minute to happen, but it's just patience, right? You know what's going on. You know the sellers are losing momentum. You know this area of support. You know it's bouncing off your 50 EMA, and as it's going up and down, it's still bouncing off your 50 EMA. Now, since we're scalping, I wouldn't even what I look at in the market is different from how y'all gonna look at it, because most of y'all are probably new traders. I always hold my trades until it touch another zone, right? I usually trade from, like, if I'm swing trading something, I'll trade from major to minor. Like, I won't even close my trade till it comes all the way back to my major, like, level from wherever I'm selling it to, right? And I'll just take profits in between, right? So you could have took half of your profits here, let the trade run a little bit more, and took the profits up here. You know what I'm saying? But it wasn't no data up here to show you that the price was gonna go all the way up there. So this would have been your smartest target, right? And what happens after that? We got to break and retest, right? This is another part of this strategy that y'all got to understand. Break and retest. If you don't catch this trade down here, right? If you don't catch this price action, don't hop in this trade in the middle, okay? Wait for it to retest your area. All right, so look, right? Basically, the break and retest is you waiting for price to come to an area of support or resistance and break that area, right? Like, completely break it. And then come back up to it and then drop. So it would look something like this. If I was to take let me see, where is like a marker or something. If I take this brush, right, and I draw this, the price come down here, and then it pushes back up, right? Retest this area and then drop. You wouldn't enter as soon as it's dropping. You will wait till it come back up here, show you some price action that it wants to continue to go down, and then you would enter. and then you're gonna catch all this, right? That's basically what the break and retest is. All right, so what happened? This is exactly what it did right here. Price came back up to this area, to this zone. You know, it's still following our 13 and our 50 EMA, right? What happens? It breaks this zone, right? We got a breakout. It comes back and retests it right here. You could have took this trade here, right? On this, I would probably took it on this candle, right? Because that's a strong rejection. I would have waited for it to come back down. It's on our 13 EMA. So my stop loss would have been below here, but this wouldn't have hit stop loss, right? So you enter the trade right here, no drawdown, and then it's just up, right? That's what you want to do. And you just take your profit quick because gold moves real fast. So whatever lot size you're using on gold, if you just catch a 40 pip move, which just means gold got to go from 2060 to 2064, you done made 40 pips in like a couple of seconds, right? Or a couple of minutes, because gold is very volatile and a pip count is different from regular Forex pairs, right? So that's what happened right here. We got a break and retest. This could have even been considered a break and retest right here. I mean, we got another retest down here to our actual, like, in our zone, right? We got the candle got smaller. We got an engulfing candle right here, right off our 50 EMA, where we pull the trade right here, and then we just let it ride, right? You could have took profit up here, which would have been what? If you entered the trade after this candle, 2054 to 2064, that's 100 pips, right, on gold. If you're using a 1.0, that's $1,000. You know what I'm saying? So you catching big money. Even if you would have been a little more patient and held this trade, you could have caught like 200 pips, literally, right? So what happens down here? We get some more price action because once again, this is a strong area. I mean, this is an area that price never been to. Like I said, gold made new all-time highs. So when it came back to this area, you got to mark off your zone, right? Because it's a new high. So you mark off that zone. Price is consolidating right here. We see that price broke down, right? We got this engulfing candle right here. It covered 2 candles, almost 3, basically 3 candles. That's your trigger to get into that trade, right? On a 15-minute chart, this is beautiful. You got an engulfing candle that just covered 3 candles, right? And now you pull the trade right here. Your TP smash, because your TP is going to be at your next zone, right? Which we already have marked up earlier. So this is your TP down here. And you just literally, it's just back and forth. Then we got the 50 and the 13 EMA cross right here, which is letting you know that, yeah, the trend is switching for a minute, right? That happened right here. And you just hold the trade. Once the 50 and the 13 EMA cross, you just got to find yourself an entry. You don't want to just hop in the trade as soon as it crosses, because sometimes during consolidation, it'll just cross back and forth, right? So you want to see some type of push. Like this would have been the push that you wanted. You got price pushed back up to the 50 EMA, even though they crossed over here. This is what you want. Price pushed up to the 50 EMA. It got an engulfing candle, almost engulfed 2 candles, and then you just wait for it to come back up. It touched the 50 again. That's where you pull right here, right? You don't ever want to enter as soon as the candle closed. You want to wait until it like tries to retest that candle again, like push back up inside that candle in that engulfing candle, and then you pull, because your stop loss can be right here, right? Which is very small. What's that? 2058 to that's a small stop loss if you using the correct risk management, right? So you pull that trade right here from 2057, and you just smashed your TP. Like that's 200 pips again, almost 300 pips, right? And this is all happening within a day. Like you catching these moves during the day, right? Even up here, it came back to our zone. What happened? The candles got smaller as price was reaching the zone. The candles got smaller, right? We got this hammer. Then we got an engulfing candle that almost engulfed this candle too. So you got a big engulfing candle like that. Price push back up and close. Just pull that. And you catching, you know what I'm saying? Your TP got smashed again. And now we got a 50 and a 13 cross. But like I said, during consolidation, it's going to do that sometimes. Like it crossed right here, went back up, crossed right here. So you don't really want to pull that. This is what you can consider as a break and retest, right? Price broke this area just now and it's pushing back up. If it rejects the 50 EMA and starts to fall again, like it give you an engulfing candle or something, you can go ahead and pull that trade and you just catch it down to the next area, which will probably be right here, right? And then your TP gonna get smashed. Like this is basic market structure, but if you're using it with the EMA too, you're gonna catch moves every time. Now you could do this on US30 and gold, but like I said, or you could use this on a Forex pass too. It all work the same. It's just the pip count be different for different paths. So you just gotta manage your risk, and you should never really be losing no trades. So let me know if this video helped y'all out. If this video get like 100 likes, I'm gonna drop my $100 to $1,000 challenge video one day this week. So yeah, go ahead and like up the video, subscribe to the channel if you're new. I'm gonna see y'all in my next video. Let me know in the comment section what y'all want to see next. I'm thinking about bringing y'all a divergence video, because as I'm looking at the chart right now, we see a clean divergence right here. Some of y'all might know what it is, but some of y'all don't. But that's a real big part of trading, and I'm gonna show y'all soon. So let me know if this video was helpful to y'all, and I'm gonna see y'all in my next one. Peace.